Hello, my name is Todd Whalen. I'm the founder of Advanced Tax Solutions. In this video, I'm going to talk about how to get back into the system and what you need to know if you haven't filed taxes in a long time. I earned my CPA certificate about 30 years ago and started Advanced Tax Solutions at about that time. I have a few other certifications specifically in dealing with the IRS, and you are welcome to go onto the website advancedtaxsolutions.com. My bio is there if you would like to make sure you're comfortable trusting what I have to say. But basically, I've been doing this for a long time. The last 20 years, I've been doing this exclusively, just fixing tax problems for people who've gotten in trouble with IRS. The first criteria for all solutions with IRS require that you be current on your tax filings, and that's what this information is about. As you are painfully aware, the IRS problems are tough. They really are. They can cause anxiety, financial ruin, and tremendous fear of the unknown. I've seen IRS problems break up marriages, and I've seen the stress ruin people's health. There isn't much in a person's life that a bad IRS problems doesn't touch in some way. I hear over and over that even romance just isn't the same with the tax problem hanging over your head. So once the tax returns are filed and in the system, you may be fearing what's going to happen next. You may owe the IRS a lot of money, maybe even more than you can pay. I have another video series that you'll probably find helpful. There really isn't a one-size-fits-all solution, but in the next series of videos, I'm going to discuss in some details the various types of solutions that are available if you owe the IRS money. But as a preview, I'll say that most problems with IRS, probably 90% or more, can be fixed by considering 4 different types of strategies. I'm not going to go into a lot of detail about those today, but the solutions I will go into in the following videos are offers and compromises, the statute of limitations, uncollectible status, and installment agreements. Here's a brief explanation at least of what they are. A lot of people have heard about the first one, which is an offer and compromise. You hear a lot about this in the various TV and radio commercials, and they can be a great solution given the right set of circumstances. We do a lot of them. In an offer and compromise, you're basically settling with the IRS for less money than you owe. It's a great solution, and a lot of people really hope for that solution. If you owe a lot of money and you don't have very much money or ability to pay the IRS, it can be a great solution. In the next video, I'll go into a lot of detail on how they work, who will qualify, and how to go about submitting one. I'll also talk about in depth the statute of limitations in that other video. The statute of limitations is how long the IRS has to collect from you. It's set by law. Understanding the statute of limitations is very important as it affects just about any solution you may want to set up with IRS. In the collections video, I'll explain why, but generally, the IRS has 10 years from the time the tax return has been filed to collect what they owe. There are things that can extend that, and I'll talk about those in some detail. Then there's uncollectible status as a possible solution. Uncollectible status is something that most people haven't even heard of. It's rarely mentioned on TV or radio commercials, but it can be a great solution. Uncollectible status is basically the equivalent of a payment plan of 0. In the collections video, I will go into much more detail on what that means and when it would be a good solution and when to avoid it. Now, if an offer and compromise doesn't work, the statute of limitations isn't close to expiring, and uncollectible status isn't the right fit for you, the last type of solution is an installment agreement. In other words, if nothing else works, you need to set up some type of solution, some method of paying them so that the IRS doesn't start taking your stuff. Bank levies and wage garnishments are not the ideal way to handle a tax problem. In these cases, it's best to set up an installment agreement and make arrangements to pay that with terms that you can live with. There are different methods that the IRS will accept on how to set up an installment agreement, and each method provides a different payment amount. I will cover all of those in detail in the other video. But any solution with the IRS will require that you are current on your filings, and that's what this video is about. This presentation is an adaptation of what I generally go over in our small business group workshop at Advanced Tax Solutions. This free workshop was created for people who owe less than $25,000 because generally, if you owe less than $25,000, professional fees may just be too high in comparison to what you owe, and so not feasible. We're always happy to help, but this is really designed to help you help yourself. If you can't afford professional help, or your problem is too small for us to get involved, here's our level best attempt at getting you some free advice on how to get back into the system. Knowledge is power when dealing with IRS. My heart's desire is to give you a good idea on how to go about this on your own. The first thing you need to know for any solution, including the aforementioned above, is that the IRS requires all tax returns be filed before they allow you any kind of solution. No payment plan, no offer, no nothing. And most of the time they won't even release a levy until all tax returns have been filed. Now that seems pretty straightforward. The IRS will tell you that all tax returns must be filed. But this is tax law, and nothing in tax law is straightforward. If the IRS, in the IRS's mind, when they say all tax returns must be filed, they are generally speaking of the last 6 years. So why 6 years? They actually tie it to the civil and criminal statute of limitations. You know, a couple things you probably should be aware of if you haven't filed in a long time is the civil and criminal ramifications. If you haven't filed in a long time, you really need to understand the legal ramifications. If you don't file a tax return, it's considered a civil crime, and you can actually go to jail for up to 1 year for every year you haven't filed. But the statute of limitations for prosecuting that civil crime is 6 years. Therefore, you are only at risk for the last 6 years, and that's basically one reason that they only go back 6 years. Just so you know, and I don't want to scare the daylights out of you, please understand it's very unlikely that the IRS will pursue you along the civil or criminal route, but you have to understand it. In just about every case I've seen, been involved with, or even read about regarding civil prosecution for not filing, it's been a tax protester. Generally, what I've seen the IRS go after have been the people who have said the tax system is illegal, or they have reasons to define their income in certain ways, that income is not income per the definition of income in the Constitution or some other method, and then saying, I don't have to file and you can't make me. Well, that's not a good position to take with the IRS. The IRS can and will put them in jail until they get religion. I can't say that the IRS will never go after you in that way, but, you know, because the law states that they can. But I am saying this is very, very unlikely that just because you haven't filed in a long time, the IRS wants to put you in jail. It's not the case. Now that's the civil side. On the criminal side, if you don't file for the purpose of not paying, then it becomes criminal. Here's the difference. On the civil side, civil is not filing. On the criminal side, criminal is not filing for the purpose of not paying. So here's an example. If you're a wage earner that makes about $30,000 a year and had some taxes withheld but didn't file, that probably is not going to be looked at as a criminal event. Let's say, however, that you make $300,000 and you had your employer show exempt from withholding and no tax was withheld, and then you didn't file. It would sure give the appearance that you intentionally avoided the taxes being paid and then didn't file. Well, that could be an indicia of a criminal act. In any case, the statute of limitations for both the civil not filing and criminal not filing for the purpose of not paying is 6 years. Now, I really don't want you to be paralyzed by fear of all this. The numbers have to be pretty big before the IRS would want to prosecute you criminally. If you have a large balance due, maybe you want to talk with somebody, but know this, it costs the government a lot of money to prosecute someone criminally, so you're probably not worth the effort. That being said, if you're going to owe a lot of money, you may want professional help, and that is certainly beyond the scope of this video. So please stay with me and let's move forward. The point of all this is to let you know why generally only need to file the last 6 tax years to get back into the system. Even the IRS's own manual, which outlines how the IRS is supposed to do business, it's called the Internal Revenue Manual, or IRM, that states if an IRS employee wants to request more than 6 years worth of tax returns from you, they must get permission from a manager first. So 99% of the time when I'm working on a case with IRS, they really only want the last 6 years taxes filed, even if you haven't filed in 10 or 20 years. So that's good news. I really don't want to make this video a sales pitch, but I do want to point out where we can help. We're constantly working on cases where taxes haven't been filed for a long time. If you need help filing your taxes, because who really has the programs and forms that go back that far, you can call for an appointment and mention this video, and we will be glad to meet you. You'll meet with a professional, not a salesperson, for a one-on-one meeting to discuss your personal situation. If you haven't filed for more than 2 years, we won't even charge you for the meeting. The information's free. It's our way of giving you even more free information, but at that point, our hope is that you would let us earn your business and we could be your tax preparers from now on. We have all the tax programs necessary to go back and file any and all tax returns as far back as need be. We can also get your income information from the IRS to help you file your taxes, and we can get it in such a way that the IRS Collections Division doesn't even know we asked for it. I want to point out something that may save you money. I've all too frequently seen so-called tax resolution firms indicate that all tax returns are required to be filed, and they want you to file every last one of them, even if it's been 20 years since you've last filed. Either they are unskilled and haven't even read the Internal Revenue Manual, which would be crazy to represent clients without knowing how the IRS operates and what the manual says, or they simply don't care what it says and they're trying to pad their commission check by selling you something you really don't need. It would be a rare exception for the IRS to demand more than the last 6 years be filed. If you're being sold this type of bull, just hang up, as you can't trust them. They are either hearing the ching of a fat commission check, or they don't have any idea of what they're talking about. So just beware. A lot of times it saves people a lot of money not to have to file the last 5, beyond 6 years. If you haven't filed for 20 years, that's a lot of tax return fees that hopefully, you don't have to pay. So let's talk about what happens if you don't file and the IRS files a return for you. A lot of people don't know that they can do that. The IRS can file a tax return for you, and when they do, it's called a substitute for a return. An SFR is what the IRS generally calls it when discussing it. What an SFR is, or a substitute for return, that basically is the IRS saying, all right, you didn't file, so we are going to take all the information we have on you and extrapolate all that information out and create a worst case scenario tax return for you. In other words, the IRS uses their best guess, or you might say their worst guess, to prepare a tax return for you. And you'll owe the max you possibly could. They use the worst filing status. They give you no dependents, even if you're entitled to them. Even though your mortgage statement and real estate taxes were reported to the IRS, they will ignore those legitimate deductions, and they will report as income any 1099 self-employment income, but not allow any business expenses. If there are any stock sales, they will report the whole sale as gross income and not deduct a penny for what you paid for the stock. I've even seen them report the gross sale price of a home sold that shouldn't even been taxable at all. In other words, they're going to totally plunder you on this tax return. They're going to come up with a really high number and shoot for a worst case scenario of what you could possibly owe. And if you don't do something about it, it becomes a legal debt, and they can enforce collections with all the wrath the IRS is famous for. I can't stress that enough. You legally owe them the money. Occasionally, I'm invited to speak on various radio stations to discuss IRS problems and such, especially around the tax filing system. A while back, I was on the Rock of the Rockies radio station, KBPI, with the host Willie B. Willie B was broadcasting from the station's studio in what is now named the O'Mara Showroom. However, at this particular time, it was called the Bud Light Suite. Generally, when I'm on the program with Willie B, people call in live and talk about their tax problems, and I give some advice on how to go about their situation. But a gentleman actually came into the station while the broadcast was live and sat down and told us a story. He had been a homeless person for a while, and he had some personal difficulties and ended up with basically life on the street for a number of years. He was a really nice guy, and he was fun to talk with, and fortunately, he was able to come clean up his life and was trying to get back, get his life back in order. However, when trying to get it all together, he ran into a huge roadblock with the IRS. He went to the IRS to start the process of getting his taxes in order, only to find out that the IRS had already filed for him and said this homeless person owed somewhere upwards of $200,000, and the IRS wanted to collect. And of course, that's why he came into the station. What a mess. How could a homeless person incur hundreds of thousands of dollars in tax liabilities when he was living on the street and hardly making any money for 7 years? The answer, of course, is the IRS created substitute for returns on his behalf, and they were a legal debt. Well, that actually took about a year to fix, but we were able to prove to the IRS that he obviously could not have earned that kind of money to owe that kind of debt. But really, how we won the case is we challenged the IRS as to how they came up with his income figures. We formally protested how they calculated his income, and they couldn't even come up with a reasonable explanation and they couldn't prove the income, so they ultimately ended up acknowledging the returns were calculated wrong. The real liability included penalties and interest. Even everything for all years was under $1,000. So we got him back into the system. He was a really good guy, and stuff happens in life that can make it hard, but man, to try to get back on your feet and then be pounded by the IRS for a debt that never should have even owed really can be overwhelming. In his case, he ended up with a really happy ending, but the moral of the story is that those IRS prepared substitute for returns can be brutal. You have to be very careful about being surprised by a debt that you didn't even know you owed. So let's talk about that. Let's talk about how the IRS goes about these returns. What are the processes? Well, when the IRS decides to do this to you, they will prepare the return and send you a letter stating that they intend to do so and how much you owe if you don't do something about it. What they want is for you to file your own tax return. But if you don't, then their proposal on what they think you owe becomes a legal debt. The real crux to this problem is that they send this letter to the last known address. That last known address is the address listed on the last tax return you file. Just so you know, that last known address can only be changed by filing a new tax return or by filing an IRS form 8822 change of address. The change of address that you give to the post office means nothing to the IRS. They will only acknowledge the new address on a new tax return or as identified on their change of address form 8822. Now, Most people who haven't filed in 5 or 10 years don't live at the same address now as they did when they filed the last tax return many years ago. They've moved at least once. Excuse me. Because a change of address with the post office means nothing to the IRS, generally, you don't get the notice that the IRS is proposing one of these worst-case scenario tax returns. Because they've sent the letter to the last known address, they have legally fulfilled their obligation to notify you, and in their minds, they have notified you what they're going to do. After you don't respond, the next thing they do is prepare the return. And they say, okay, now you owe all this money, and you do legally owe them all that money. Then that works so well, what do you suppose they start sending the collection letters now? Yep, you got it. That same address. Then they send a series of letters regarding collections to that same address where you don't get mail. Finally, they send a letter called a final notice of intent to levy. That's kind of a good news and bad news letter. The good news is that the notice has a great appeal rights, and it's one of the strongest appeals against collections with the IRS. The great thing about it is you can actually take the IRS to court on a collection matter, and it's really the only way to get into court on a collection matter in most cases. The bad news is it's a 30-day letter, meaning that once they've mailed that, you have 30 days to respond, even if you never saw it. And when you don't respond, the IRS can have their way with you. They can do whatever they want to your financial picture. So, if you've moved, how do most people find out that the IRS filed a substitute for a return for them? Well, they find out when the IRS starts taking their stuff. In other words, the IRS has taken the money out of their bank accounts, or they garnished your wages, or both. A lot of times people find out in a very harsh reality what the IRS believes they owe them. At that point, they own you. I mean, you have to jump through all kinds of hoops because they're already taking your stuff and you have no money to pay your bills. That's a very tough position to be put in. Sometimes you can protest the IRS filed returns, but that takes a long time, and the whole time you're in that process, sometimes up to a year, the IRS can still collect from you. They can legally collect the whole debt you supposedly owe, even while you were waiting for an answer from them regarding if they will accept the protest returns. So you have to get a solution for the collections portion in the meantime. Now, before you decide to protest that return, and it's not always to your benefit to do so. In some cases, it's best to leave that return as is and owe them the higher amount. I know this doesn't make sense, but in some cases, it really helps to owe the IRS more money. It doesn't make sense now, and I know that it's counterintuitive, but I promise I will explain that, and you will understand it after you watch the collections video. In some situations, the more you owe, the better. Once you are caught up on your taxes and your filing requirements, you really may want to listen to that collections video. There's a lot of good information in there, particularly the portion on offers and compromises. Anyway, I promise to explain this in detail, and before the end of that presentation, I will make sure you fully understand the concept. It's very important. But in a nutshell, that's what the IRS can do if you haven't filed, and some bad things that they can do, particularly related to a substitute for return. Let's move on and talk a little about along the lines of tax protesting. I understand, I totally get it, that some people believe the tax system is illegal or income isn't income per the definition of the Constitution, or whatever argument that you have. I've heard a lot of those arguments, and some of them sound really good. They sound reasonable. The reason I mention this to you now is that those of you who haven't filed for a long time are more susceptible to buying into this type of program. You may be looking at a large balance due, your back is against the wall, and you really don't know what to do, and then somebody comes along with these great sounding arguments and explains that you really don't have to file your taxes, and the system doesn't apply to you for some good reason. And it does sound like a good reason. I know a lot about taxes, and I've heard some pretty darn good arguments about the tax protester movement. So, I just say, let's say for sake of argument that they're right, and that the arguments have merits. I liken it to being ran over in the crosswalk. You may have had the right of way, but you're still dead. So I've seen firsthand the damage that taking those positions can cause. Let me tell you what I've seen, and I've seen it more than once, and I've never seen somebody win. What happens when you file a tax protester type return, when the IRS determines that the return is based on protester arguments, they deem the return to be a frivolous return. Then they basically deny the whole return and start the process of filing a substitute for a return, calculating the taxes as stated previously with the worst case scenario of what a person could owe. Then they also issue a $500 per person per year penalty. If you've done this a lot of times, these issues come up 3 or 4 years at a time, meaning it all catches up at once. Once they catch up to you on 1 year, they bring in all the other years. So let's say you filed 3 tax returns as a joint couple, then the penalty would be $500 per person per year. That would be $1,000 per year, 3 times, $3,000. But then what happens? You can file an appeal and of what the IRS has determined, but you have to realize that that appeal goes to the IRS. So it's another IRS person looking at the appeal. What they do is determine that this is a frivolous appeal and then deny you your hearing. You don't even get to talk to them. And you lose automatically, no hearing, anything. And by the way, there's a $5,000 penalty per year now for so now you've racked up another many thousands of dollars in penalties. But we live in America, and therefore at least you get your day in court, right? You can take the denial of the appeal to court. That's something our forefathers assured us. You can, and a lot of people want the court to hear their arguments, so they file a petition to tax court. Next, what happens will astound you. What happens then is the IRS can write a letter to the judge and ask for something called summary judgment. What that means is the IRS is saying to the judge, you make a decision now based on the facts outlined in the petition. Don't waste the court's time, as you have all the facts you need in order to make a decision, as this has been heard 1,000 times. There's no sense wasting the court's time and energy. The judge can and will look at all the tax protester positions and say this is a frivolous tax case and rule against you, even though you've never had a chance to make your arguments before the court. You don't even get to speak. You don't even get to show up. You just have to rely on the arguments in the petition that you filed, which are the tax system's not legal or your income is not income. Then the judge, who said no and ruled against you with no court date, closes the case and then issues you a $25,000 per year per person fine. I had a case like this when I got involved after they filed the petitions and after the court had ruled against them. And now, in addition to the $5,000 penalties and then the $500 per person penalties, the court issued a $25,000 per person penalty, and it was a joint return, so the penalty was $50,000 per year. In this case, 3 years, so $150,000 worth of tax court penalties, plus all the interest, plus the other penalties, and they had to live with the IRS's SFR horrible estimate of what they owed. It literally ruined these people's life. So, It's dangerous. And I actually worked on another case where the person had been arrested at gunpoint. It's kind of a funny story, except for the seriousness of it. A man who eventually became a client and his employer were very active in the tax protester beliefs. It was common knowledge among his fellow employees that he was involved in this movement. And one day, while the gentleman was in the restroom, federal agents came and knocked on the door saying, "Federal agents, come out." He thought it was his fellow employees teasing him for his tax protester positions, so he was kind of gruff when answering through the bathroom door. He didn't come out until he finished his business there, but when he did come out, he said desks were all turned over and there were all kinds of people hiding behind these desks, and these people were federal agents pointing guns at him. He said he looked like a Christmas tree with all those lights on him. Those little red laser dots on his chest were laser sights from loaded guns pointed at him. At that moment, he realized that the tax system wasn't voluntary after all, and he had a change of heart right then and there. And fortunately, he turned a leaf with them and got back into the system and cooperated with them. That's when we started working with them. We ultimately ended up with a solution that the IRS accepted, but this was a very, very stressful time in his life. His employer did not cooperate and continued down the path of the tax system is illegal, and the last I heard, he was still in jail. So just so you know, this is a big deal. I mean, a really big deal. So please don't go down that path. I only say it to encourage you not to, because I've seen the damage firsthand and the fallout from walking down that path. Now, I personally don't care if somebody really believes in that movement. I admire you if you really believe that the tax system is illegal and you're willing to forfeit your freedom for that belief. I really admire you. I just can't help you. I can't help you, so please don't send me pamphlets and letters and tell me how unfair that is and how unfair the system is. It's okay if you believe that. I appreciate you and I wish you the best. I just can't help you. Now, if you've gone down that path, my only real advice would be to let's change that path before the IRS gets involved, because it really gets ugly. I'm always happy to help somebody to get back into the system if I can. It really depends on where you are at in the process. I'm always to help them, and I'm happy to help you. If this is the case, you really might need professional help. Not trying to sell you something. I truly worry about you. So anyway, be careful. The tax protester movement can really bite you. So let's talk a little bit about the statute of limitations. In the collections video, I'll talk about how long the IRS has to collect from you and the things that can extend the collection period. The general rule is that the IRS has 10 years from the time you file a tax return to collect the balance due from you. The really unfortunate thing is, however, when the IRS owes you money, you only have 3 years to collect from them. The IRS has 10 years to collect from you. You only have 3 years to collect from them. You can certainly tell who writes the rules. If you have a refund coming on a tax return, you only have 3 years from the due date of the return to get that refund. Miss the deadline and you forfeit your refund. As an example, let's say you're looking at a 2016 tax year where the tax return hasn't been filed yet. The 2016 tax return would be due to the IRS on April 15 of 2017 unless you filed an extension. Therefore, the 3-year statute of limitations for 2016 would start on April 15, 2017. You have 3 years from that date, or April 15th of 2020, to get a refund, or you lose that refund forever. If you filed for an extension, the 3-year statute would start on October 15th, 2017, so you would have until October 15th of 2020 to get that refund. In closing, I hope this gives you some ideas on what you need to know to get back into the system after not filing for a long time. I hope that your personal situation isn't that bad, and if not, just file and move on. If you need help, getting information on your income or filing tax returns. Those are some of the services we offer. And we have the older tax return programs open all the time, so it's no problem for us to go back. If you're just feeling sick due to the stress of all this, please know we truly are here to help you, and our office is a judgment-free zone. We understand that things happen, and we would be honored to if you'd let us help you. Fixing tax problems, it's our life's work. Now, when all is said and done and all the returns are filed, I hope you don't owe anything. But if you do owe, and it's more than you can reasonably pay, please take a look at the video on solutions for those who owe. As mentioned at the beginning of this talk, in those videos, we'll talk about offers and compromises, statute of limitations, uncollectible status, and payment plans. There's no charge for this information, and we hope you're able to fix the solution on your own. But if you can't, we are here to help, and we have a lot of knowledge on staff, and we truly believe it's helpful. If you mention this video, we are always willing to give you a free first meeting. We're all about educating you to help you make good decisions about a tax solution. Many of the 800 numbers, those whose expensive commercials you hear everywhere, will have you talk with an unlicensed salesperson who gets paid a commission to talk you into a solution. Many of them get paid a commission check based on how much they can get from you. At Advanced Tax Solutions, I promise that when you come in for a meeting, even when it's free, you'll be speaking with a person who is a licensed professional who's licensed to practice before the IRS. And in addition to passing the requirements of the licensing boards to be able to represent clients before the IRS, every professional in our firm that is authorized to meet with you is also a certified tax resolution specialist. That means that they have also met the standards of competency, training, and proven knowledge by the American Society of Tax Problem Solvers. In other words, you will meet with a professional who has real-world experience, does this kind of work daily, and is very skilled at fixing tax problems. There's never an obligation once you meet with us, and our professionals do not get paid a commission check for selling you something. You will read in our reviews, there's many posted on the website, a lot is said about integrity. We really base our services on what's best for you. There's never a self-serving solution for a commission check. Never. Feel free to click the link to our website if you'd like to meet with a professional. In finishing, if you enjoyed the information and it helped you, we're very glad. If you would be so kind, if you would be so kind as to give us a five-star Google review for the effort, we would sure appreciate it. It helps our search engines, and it really is a benefit to us. So on the other hand, if you feel like you have ideas that would make this helpful or a better product, please email me directly, and I'll try to incorporate your ideas into my next version of this video. My email is Todd, T-O-D-D, at advancedtaxsolutions.com. Again, thanks and best wishes. This is Todd Whalen signing out.